Hello, this is Brian Shannon from AlphaTrends.net. Today's Thursday, July 31st, 2008, and the market just closed. We had another very volatile session here today, and the market didn't make any progress, but it really didn't get damaged either. You could say that you could make a case that it actually held up well considering some bad, so-called bad fundamental news. But what we're going to focus on is price action here. You can see that we remain above the January/March lows, and that continues to be an area where this battle is being fought. What I didn't point out yesterday is that this 10-day moving average has crossed above the 20-day moving average during all this indecision here recently, and that's what moving average crossovers represent, is indecision. It doesn't mean a time to act. It means that basically the path of least resistance, which had been lower, is now kind of turning more neutral, and I think the intraday time frames continue to display that as well. Here, the key level in the S&P 500 as far as resistance that needs to be cleared if this market has a chance of any further upside and perhaps continuing up towards that declining 50-day moving average near just under 130. We need to see it get above this level here at about 129. As I outlined yesterday, this looks like a cup and handle pattern forming, and we had a failure late in the day as it went past, as it challenged that level earlier in the day. But you can see here, sellers came in late and took control of this market, pushed it back below the declining VWAP, and we're left with really more of a neutral environment here that comes within the context, though, of a bigger downtrend on the weekly time frame. So you still have to be very careful in here. When I post these intraday charts that say, maybe an afternoon squeeze is coming, that's a possibility that you want to be alert to. But remember, as I put on a lot of these charts and things, that defense is the number one rule, basically money management. You have to play a strong defense. You can't get locked into a belief, especially with a declining 50-day moving average like we have here. Bullishly on the 30-minute time frame, we do have a rising 5-day moving average, and the market continues to hold above this level here, which I think is important, near about 126.20 or so. And then, of course, the more important level is down here near about 123.40, but that's really too far away to be of any real influence or concern right now. For now, I think tomorrow this is going to be the more important level, 126.10, 126.20, right around in there. If the market can hold above that for the week, then I think that the Bulls can breathe a little bit easier over the weekend, and there's not much to worry about, which may pave the way for better things next week. But that's too far ahead to really look. Let's just keep it short-term focused. Oil was back down today, as we'd been focusing on this 30-minute time frame. The market made this higher high yesterday. It was preceded by a higher low. Now we've got this 5-day moving average flattening out. The market is finding some support here. It looks at this prior level that had been important, which is 100. It was support over here a couple times, then acting as resistance. It broke past that, squeezed some shorts in there, I think, yesterday. Now it's back to testing that level, and if it can successfully hold above this level and continue back to the upside, then I think the chances that we go on back up to test the prior level of support on this bigger time frame, which is near about 107. That's about where we would encounter the declining 20-day moving average as well. But also be aware that a lot of times when we have this type of activity, we have this breakout and it comes back in, a lot of times we get continued weakness, which would obviously be the preferred setup. I think that we prefer to see oil go down, the USO, and maybe test its 200-day moving average. That would help the equity case, obviously, as that would take off a lot of concerns and give people a little bit more confidence in this economy overall. The Russell 2000 was down 41 cents. It obviously continues to do battle with that declining 50-day moving average, the 200-day moving average, and this prior level of support in here from May and June that we've been focusing on. When we look at the hourly time frame, that's where we can see that level most clearly. And as I said yesterday, really need to see it clear and hold above 72 and a quarter. A break above it's not good enough. We need to see it get above and then see that level, maybe run up to 73, then test it as support, and then we can have maybe a little bit more confidence that this market is finally making the turn. As we know, this is the strongest market group. Actually, this year it's only down about 5% or so versus 25% for the financials, 10% for the NASDAQ and the S&P 500. By the way, I don't know if you saw during the middle of the day today on my blog, alphatrends.net, I had posted a link to a live site where I was able to do what I'm doing right now with in real time. It also had a text chat area, so people were able to log in, look at my screen, listen to what I was saying, and ask questions. This is a free service, and the instructions on how to get onto it are going to be posted on my blog tomorrow at noon Eastern. I'm going to do another live free one, and on Sunday afternoon I'm going to do one for people who have purchased the book, and I'm going to choose another random word from a random page. That will be the password for Sunday evening, Sunday at 6 p.m. Eastern. I'll post that over the weekend. Another reminder tomorrow. But tomorrow at noon, anyone can log in and ask your questions or whatever. It requires just a, if you want to ask a question, you got to sign up, and hopefully you'll use your real name and you'll be nice as well. But the IWM short term looks like it needs to get above 72, and like I said, 72 and a quarter, actually 72 and a half. If it can get above and hold above that level, then maybe we can see a little bit further upside. But we're still, we're fighting that declining 200-day moving average. It's nice to see that we're getting more frequent tests of the 200-day moving average, but still, you've got to be very cautious in this environment. Right now, the more important level of support for this market is found right here at about $70.60. Below that, of course, we have that $69 level, and of course the 68 was the bigger number that was penetrated and led to this most recent rally. The NASDAQ 100, man, this one kept looking like it was threatening to break out today. This high right here from, looks like it was July 2nd, was $46.15. The market was unable to push above that. It looked like it was going to get going. I put a rocket, a picture of a rocket right here, thinking it was getting ready to go, but also caution that, keep your stops in mind always. And realistically, we still continue to be bigger picture, 44 to 46, stuck in this range. It's been making these higher lows. That's giving us reason for encouragement, but you can't get too aggressive on the long side with a declining 50 and 200-day moving average. So when you see these bullish setups apparently occurring, you don't want to get too aggressive and hold on to that aggressive bullish position when you have the bigger picture. In other words, don't give the benefit of the doubt that you can just buy it and hold on to it. You have to manage these positions very aggressively. It came down to the 2-day VWAP and bounced, fell back down through there at the end of the day. On the 1-minute time frame, it bounced through here. I was actually on the live chat right here. I had bought the QLD and was looking for it to travel the distance of this head and shoulders pattern, inverted head and shoulders pattern. I also had been in a trade in CMED, which I had purchased earlier in the day, and this is what I was outlining live today. Was I had sold actually some of it live right up here at $49.25, a penny off the high. I'll be doing that again tomorrow for free. Log in or check at alphatrends.net, and you can log on at noon Eastern tomorrow to tune in.